Ever feel like just the fear of taking a loss is like the big thing holding you back from really like going for it with trading?
Yeah.
You are so not alone.
Right.
It's that feeling like when you're about to jump in a pool, but you have absolutely no idea how deep it is.
Yeah.
So today we are talking all about turning that fear into like a strategy.
Okay.
So you can trade smarter, not just like try to avoid ever losing.
Right. It's about really shifting your perspective from like losses equal failure to losses equal data.
Ooh, I like that.
Yeah.
So we're getting into all that for this deep dive with some really great advice from Hand Tech Markets.
Yeah, they're great.
They're a global trading platform, but their advice is like super practical no matter like what level you're at.
Yeah. And they have a really good way of kind of cutting through all the noise and the jargon,
Mm-hmm.
which I think is super important with a topic like this that can be kind of emotionally charged.
100%. Now, they start off with this idea that honestly, at first I was like, what? Good losses versus bad losses.
Okay.
And at first I was like, isn't any loss a bad loss?
Right.
But they actually break it down in a way that's like, oh, that actually makes a lot of sense.
Yeah.
So do you want to explain that a little? Because it clicked for me when you explained it.
Yeah. So essentially, a good loss is a loss that happens within the framework of your strategy.
Yeah.
It's not about being happy about losing money.
Right.
It's about recognizing that even the best laid plans sometimes don't work out the way that we hoped.
Okay, so like say your plan was to buy a stock at a certain price,
Right.
but it dips just below that and then maybe it goes up.
Yeah.
So you're like, okay, I stuck to my plan, but that time it didn't work out.
Exactly. And that's a really good indicator that your strategy is fundamentally sound, but it might need a little bit of tweaking,
Okay.
as opposed to a bad loss, which is driven by emotion, or honestly not having a plan at all.
Right.
Like you're just kind of going into a trade because you have like a hot tip from somebody, or you're just feeling really impulsive.
Yeah, or everyone's really hyped about this thing.
Exactly. And then you end up panic selling later.
Yeah, it's like walking into a casino slapping all your money on red because you're like, I feel lucky.
Right.
And well, yeah, you get the picture.
Yeah. And they have this really great analogy in the article about a road trip.
Oh, yeah. Tell me about that.
Yeah. So if you think about it like a detour because of unexpected traffic,
Okay.
that's kind of like a good loss. It's annoying you have to take this detour, but maybe you end up finding this really cool diner that you never would have seen otherwise.
Right.
But if you blow your entire budget on souvenirs on day one because you got caught up in the moment,
Yeah.
that's a bad loss. And
Yeah.
it could derail your whole trip.
Yeah, you're eating ramen for the next 3 weeks.
Exactly. And the thing is with both good and bad losses is that they both offer learning opportunities.
Okay.
The key is to analyze what went wrong, why it went wrong, and how you can use that information to make better decisions in the future.
So it's not just about the money, it's about understanding like the why.
Yes, exactly.
And speaking of why hand tech really gets into the psychology of like taking a loss,
Yeah.
they say that understanding your own emotional response to a loss is just as important as like the actual numbers.
It's so important. And they talk about how some people crave that immediate closure after a loss.
Mm-hmm.
So they need to dissect what happened, and they need to adjust their strategy right away.
Okay.
And that's where journaling can be really effective.
Like get it all out there on paper.
Exactly. And then other people might feel really discouraged after a loss,
Yeah.
and they need to step back to avoid making those emotional decisions later on.
Right.
So for them, taking a break from trading, even if it's just for a few hours,
Mm-hmm.
can be crucial.
It's like almost recognizing I'm not in the right headspace to be making these decisions.
Exactly.
That the best trade is no trade right now.
100%.
It's interesting how much of this is just about like knowing yourself,
It really is.
which a lot of people think trading is just numbers,
Right.
but it's really about psychology, would you
Oh.
say?
Absolutely. It's about recognizing how your emotions, even the subtle ones, might be influencing your trades.
Yeah.
Like, are you more likely to make impulsive decisions when you're stressed or tired,
Yeah.
or do you get overconfident after a big win?
Oh, yeah.
It's about knowing those tendencies so you can manage them more effectively.
So self-awareness is key. So
Absolutely.
it's like you almost need like an emotional game plan
Yeah,
right alongside your actual trading strategy.
absolutely.
Speaking of which, hand tech doesn't just leave us hanging with all this like, oh, be aware of yourself.
Yeah.
They give some solid don'ts for dealing with losses. And I gotta say, I've been guilty of some of these.
Oh, yeah. We all have.
It's so easy to fall into these traps.
Yeah, especially when you're feeling that sting of, like, the recent loss.
Yeah, the first one. And it's so tempting to do this. Why is just completely ignoring it?
Oh, yeah.
Like, I'm just going to pretend that didn't happen. Oh, it
Yeah.
was just $50. No big deal.
Right.
But like deep down, that is how you repeat it
Yes, 100%.
because you're not actually learning from it.
Every loss holds valuable information.
Okay.
So ignoring it is like throwing away a piece of the puzzle.
Right.
You might think that that one piece isn't a big deal, but you're never going to see the full picture.
Okay. That's a really good point.
Yeah.
And then the other one that I'm so guilty of, it's like the blame game.
Oh, yeah.
Blaming the market, blaming your broker, blaming that friend who gave you the hot stock tip.
Yeah.
But it's like you're not taking responsibility for your own choices.
It's human nature to want to deflect blame when things go wrong.
Right.
But in trading, like most of life, taking ownership of your decisions is where the real growth happens.
both the good and the bad.
Yeah.
So instead of being like, oh, the market crashed, it's not my fault I lost money.
Right.
It's what could I have done differently to manage that risk, to like weather that storm a little bit better.
Exactly. It's about focusing on what you can control,
Okay.
which is your strategy, your risk management, and your emotional responses.
Yeah.
And hand tech, they don't just leave us hanging with all the don'ts.
Okay, good.
They actually give us this really great, actionable framework for turning those losses into learning experiences.
Yes, they do love that about them.
Yeah.
And I like how it's presented too. It's not like, here are the rules.
Right.
It's like, here are some tools.
Exactly.
Like, let's figure this out.
Yeah, it's all about empowering yourself to make better decisions.
Okay, so they say that analyzing a loss is like almost doing a postmortem.
Precisely.
Yeah.
You don't just ignore the data after you do a scientific experiment, right?
Right.
So it's like, okay, what can we learn from this?
Okay, so what are some of the things we're looking at in this postmortem?
So they break it down into two parts.
Okay.
Examining your emotional response and then dissecting the strategy itself.
So emotional response first.
Right.
So this is where they talk about journaling
Yeah.
and not just what you traded, why you traded,
Right.
but how you felt during that whole process.
Exactly, because it's about bringing those subconscious emotions to the surface.
Okay.
Like, were you feeling confident, anxious, greedy, fearful?
Right.
Recognizing those patterns is the first step to managing them effectively.
So even like, did I find myself constantly checking my portfolio after a win?
Yes.
Or did I not even look at it after a loss?
Exactly.
Like, those are important things to notice.
Exactly. Those are clues to how your emotions are influencing your decisions,
Interesting.
even if you're not consciously aware of it.
Okay.
It's about tuning into those subtle cues.
It's like when you're about to hit the buy button, but you notice your hand is shaking a little.
Exactly.
Like, that's your body telling you something.
Yes, that's valuable information.
Okay, so we've done the emotional side.
Right.
Now, what about the strategy side of this postmortem?
So this is where we really analyze, did the loss come from a flaw in our plan?
Okay.
Or was it more about us deviating from the plan because of those emotions we were just talking about?
Right. It's like, are we blaming the map when really we just totally ignored it?
Exactly. It's about separating the what from the why.
Okay.
Was it a bad trade, or was it a bad decision made under the influence of fear or greed?
Okay.
And they give a lot of great examples of both strategic and behavioral breakdowns.
Okay, let's get into some of those. So let's say it's a strategy flaw.
Okay.
What are some of the map problems that they point out that we should be looking for?
So they get into a bunch, but one that really stood out to me was the stop-loss settings,
Okay.
because it's like such a fundamental part of risk management,
Right.
but it's something that even experienced traders can get tripped up on.
Okay.
So for example, like setting your stop-loss too tight.
Meaning you're pulling out too quickly, even if it might have bounced back.
Exactly. It's like abandoning your road trip at the first sign of traffic.
Right. Like you might miss out on something good.
Yeah.
But then on the flip side, setting your stop loss too wide can be equally risky.
Yeah, that's like ignoring all the warning signs.
Exactly.
And just flying like that.
You might end up in a ditch.
Yeah.
So it's about finding that sweet spot,
Right.
which takes some analysis and understanding your own risk tolerance.
And that's, like you said, that emotional self-awareness thing again.
Exact. It all ties in.
Okay.
Another thing is like the indicators you're using.
So that's kind of like the road signs on the map.
Exactly. Are you looking at the right things? Are you using the right tools?
So you're saying, like, if I'm using indicators that are too short-term,
right.
I might miss something big coming down the line.
Exactly. Or if you're only looking at one type of indicator.
And they also talk about how important it is to backtest your strategy.
So it's like taking your car for a test drive.
Exactly.
Before you take it on the freeway.
I'm sure the brakes work.
Yeah, 100%.
Yeah.
So we've talked about if it's a strategy flaw, but what if it is me?
Okay.
What if it is my behavior?
So this is where those emotional gremlins
Hmm.
can really sabotage us.
Yeah.
And one that I think a lot of people can relate to is FOMO,
Oh, FOMO.
the fear of missing out.
Oh, yeah.
We've all been there.
It's like when you're perfectly happy staying in on a Friday night and then you see all these pictures and you're like, wait, am I missing out on something?
Exactly. And then all of a sudden you have this urge to just like jump into whatever everyone else is doing.
Right. And it's probably not even going to be that fun.
Probably not. But in trading, FOMO can lead to some really bad decisions.
Okay.
Like you see a stock going up, everyone's talking about it, and you feel this urge to get in on it.
Even if it has nothing to do with your strategy.
Exactly. And just like that party that you felt like you had to go to, it probably leads to disappointment.
Right. You buy high and then you panic sell low.
Exactly.
And you end up right back where you started.
And minus some trading fees, probably.
Right, exactly.
And then another behavioral trap that they talk about is chasing your losses,
Okay.
which is basically like trying to win back your money at a rigged carnival game.
Okay.
You keep throwing money in, hoping to recoup your losses, but the odds are stacked against you.
It's like that feeling when you know you've taken a wrong turn, but instead of stopping to look at the map, you just keep driving faster.
Right.
Yeah.
Exactly. Hoping that you'll just magically end up at your destination.
Yeah, and it never works out.
It rarely does.
Yeah.
And they give this really great example in the article about chasing losses in the stock market.
Okay.
So let's say you buy a stock at $100, hoping it's going to go up.
Mm-hmm.
But then it drops to $90.
Okay.
And instead of cutting your losses, you buy more thinking, oh, it's got to go back up.
gotta go back up.
And then it drops to $80.
Oh, no.
Now you're really in the hole.
Right, and the pressure's on.
Exactly. And this is where discipline becomes absolutely crucial.
Right.
It's about recognizing that maybe you made a decision based on flawed thinking.
Okay.
And the best course of action is to cut your losses and move on.
Be disciplined.
Exactly.
And I think that's something that you learn over time.
Oh.
Like, nobody starts out just being like, I have perfect discipline.
Right.
That's something you really have to train yourself to do.
Yeah, 100%.
I love that this whole, like, turning trading losses into wins.
Yeah.
It's not just like a catchy title.
It's true, though.
It's true, but it's like actually really shifting your mindset.
Right.
And understanding yourself.
It's a process.
It is process.
It's a journey,
It is.
but it's a journey worth taking.
It is. And like you said, losses are part of it.
Yeah, you can't avoid them. You just got to learn from 'em.
So next time you're like about to make a trade, think of that road trip.
Right. Are you sticking to your plan,
Am I sticking to the plan?
or are you just driving in circles?
Am I looking at the map?
Yeah, you're enjoying the ride.
That's such a good point.
It should be fun.
Yeah, trading is challenging,
Yeah,
but it should also be like kind of exciting.
absolutely.
And if you're just like filled with fear,
Right.
that's probably not a good sign.
Yeah, maybe take a step back.
Well, this has been awesome.
Thank you.
I feel like we could talk about this for like 3 more hours easily. But unfortunately, we are out of time.
I know, right?
But this was awesome. Thank you so much for breaking all this down.
Of course. Thanks for having me.
This was a good one, everyone.
Yes, it was.
I hope you all got a lot out of it. And remember, every trade, win or lose, is a chance to learn and grow.
Absolutely.
And like you said, maybe those losses will actually lead to your biggest wins.
Who knows?
Okay, everyone, until next time, happy trading.
Happy trading.